Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, it's Fed week and we're finally here. This could well now be the week that we finally see the Federal Reserve raising interest rates. The market's pretty much baked it all in. It's pretty much 80% chance of probability, although the probability has been higher according to Fed Funds Rate Watch. But it seems as though that there's still, despite the concerns over commodity prices and the impact on global demand, it seems as though that the market is pretty much looking towards a Fed rate hike this week. Now, my feeling is that if you look at, say for example, the US 10-year Treasury yield, is that falling away? Is that telling you that the Fed is probably going to be looking at that and thinking, well, maybe we need to do a dovish hike? And when I say a dovish hike, I mean sort of giving forward guidance through the likes of the dot plot and also the statement to suggest that the path of the rate hike is not going to be as steep as perhaps it could have been, maybe one or even two rate hikes in 2016. Maybe that would give the market a bit of reassurance, and maybe that would put a bit of a floor under some of these equity prices that have been falling so precipitously in the past week or so. So markets have certainly been factoring in this. In my opinion, you've seen the dollar come under some fairly sizable correction, and also we're seeing, as I said, some strong moves in forex markets and commodities, and also equity markets as well across the board. So those oil price falls are as well, they are impacting on sentiment this week, and that continues to be the case. So we need to see the Fed hopefully start to support markets a little bit. Even though it's going to be hiking, I would be looking for the Fed to be rather dovish on Wednesday. Now, how is that all going to play out through the markets? Well, we've got the forex markets, which, as I said, we've seen dollar correction. So against the euro, against sterling, against yen, we've seen the dollar come under some selling pressure. So those markets have been quite significantly impacted by that. You've seen euro dollar pulling above 108.10, now forming a resistance around 110.50, which coincidentally is the big overhead pivot barrier from the middle of the year. Now, I think that the euro might start to settle down a bit now in the coming days, in the 3 days up until the Fed meeting on Wednesday. You might see a little bit of volatility around the inflation data for the US tomorrow on Tuesday, but still I think around about $1.10 could well be where we see the euro trading into this Fed meeting. Similar sort of story with cable, really. You've had a sharp rally, but this sharp rally has taken you up to a big downtrend resistance. 4 months worth of downtrend, and every time you've seen a two to maybe 3 week rally on cable, you see a bit of selling pressure coming back in, you see the lower highs coming in, momentum falling away. Is that going to happen again? Well, the cable is a little bit weaker today, but again, I think it could settle into this Fed meeting, and it'll be interesting to see what the market does post that Fed meeting. But still, we've had that 2 week rally once again. Dollar yen, similar story, weakness on the chart on the dollar. Yen strengthening amidst the flight into safe haven trades in recent weeks, and we've seen that breakdown on dollar yen. Now the big overhead ceiling comes in at 122.20 this week, and I think that's going to remain in place. That'll be an interesting resistance in the coming days, I believe. And another move, interesting, as I said, on these commodity prices, the big moves to the downside, that is impacting on the commodity currencies, with the Aussie, for example, close to forming a big top pattern, close to forming a top pattern below the 0.7170 support. If that breaks down, we could see a further maybe 200 pips worth of downside in the technical projection. So that would be interesting there. If these commodity prices continue to fall away, that could well be seen. Now in the indices, well, as I said, we've got these indices, these equity markets falling away. The DAX has come under significant selling pressure ever since the ECB, in inverted commas, disappointed on a couple of weeks ago, but now it's formed below the key November low, 10,600 area. Now I believe that is now going to become a key area of overhead supply. Similar sort of story on the S&P 500, again forming a top pattern, breaking below that November low around 2019. Similar story again with the FTSE, although the FTSE is a big underperformer. technically speaking, the chart looks very weak still, and breaking below that key November low at 6,080, again overhead supply. So commodity prices, well, we've seen the gold price, which is pretty much stabilised really. Interesting that commodity prices across the board have come under significant pressure in recent days and weeks. The gold price hasn't moved. Now, that's sort of the two different forces at play here. We've got the dollar weakness, which should theoretically pull the gold price up, but also generally speaking, commodity prices have been under a lot of pressure. So you're sort of seeing the double sort of payoff between those two. But you do still see the gold price supported to a certain extent by the safe haven flows, and that has held up a little bit, but I still think that the gold price is a sell into strength. And oil, well, multi-year lows dating back to 2008, 2009 now on both WTI and Brent crude, very close to testing those lows. 32.40 on WTI, 36.20 on Brent crude are the two key levels that we need to watch out for. So for the rest of this week, well, we need to be looking out for, as I said, the inflation data for UK and US on Tuesday. Not really any signs of too much increase in inflation, although a slight pickup expected, but still the Fed doesn't really look at CPI, looks at PCE, which remains fairly stable around about the 1.3%. But in terms of the CPI levels, the level is sort of picking up slightly to 0.4% on for the US, the expectation there. You've also got German ZEW on Tuesday as well, but the big event on Wednesday comes with this FOMC meeting. In front of that, you do have the UK wages and unemployment data. Wages are expected to come back a little bit to around about 3%, but those wages need to stay up for the market expectations on a UK rate hike, maybe mid, maybe late 2016 to remain on course. And on Thursday we've got some UK retail sales, and then we'll finish off the week with a little bit of the BOJ on Friday. So there could be a reaction from the BOJ, but still I think bearing in mind the just slight improvement, and also the fact that the upward revision to Japanese GDP coming in, it doesn't look necessarily likely that the BOJ will act on Friday. But certainly the big event of the week is this Fed meeting. So I wish you good luck with all of that. Lots going on again, and I will speak to you again next time. Thank you.